Morning and welcome to our workshop for the week starting the 29th of July. As we approach the sort of summer holiday month of August, we're preparing for quite a busy week really. This week there's quite a lot going on. Three central banks meeting, the interest rate setting committees, US, UK and ECB, plus first Friday of the month normally signals non-farm payroll employment data from the States, which is also crowding out the calendar this week. So without further ado, let's have a look and see what is coming out. We've started the day this morning fairly quietly. There's not a lot of data out on Monday. In fact, the first real data this week is Tuesday, tomorrow afternoon at 3 o'clock when we have the Conference Board Consumer Confidence. Consumer confidence is a good leading indicator, so the market does focus on that. Slight slip back from previous month of 81.4. We're looking for a figure of 81.1. On Wednesday, we have the first insight into the employment data coming out on Friday with the private sector report from ADP. So this is the ADP non-farm employment change. Non-farm because we exclude, or the US excludes, the more volatile farming sector, which is very seasonal, so it's referred to as non-farm, but to us it's just regular employment data really. We're looking for a figure of 179. ADP can be a little bit volatile. It was definitely a better month last month, but it does have an indication. It does give indicators to what the Bureau of Labour Statistics are going to be reporting on Friday. So a weaker number could imply a weaker number on Friday. We then have what's called the advanced GDP data. This is the preliminary gross domestic product for the second quarter in the US. It's the first reading of this data. It is typically revised, but the first reading we're anticipating a figure of plus 1.1%. Quite sort of low really. I mean, bearing in mind the Fed is still predicting average growth for the whole of 2013 of 2.45%. But anyway, we shall see. Obviously, we will be expecting a better second half in that case. And then in the evening of Wednesday, we have the first of the central banks. That's the Federal Reserve, their rate setting committee, the FOMC. We know there's not going to be any policy announcement for the simple reason that there isn't a press conference scheduled. So nothing is expected there. So we're going to have to wait until really September, when the markets will be more volatile, to sort of revisit the taper on, taper off question, when I'm sure the markets will really be kicking off then. We then have overnight on Thursday some manufacturing PMI data, both from the Chinese government and independently from HSBC. So when we get it on Thursday morning, we'll be well aware of exactly what that data was and what effect it's had on the markets. And then we kick off Thursday, first of all, with our PMI data here for the UK. Again, quite positive, 52.8 following last month's 52.5. Anything above 50 still positive. But I think that's going to be eclipsed by our MPC meeting at midday. We're not expecting anything. I think Mark Carney, the new governor of the Bank of England, will probably sit on his hands now. There was a feeling we were going to get about a third bout of QE, but I think that's probably off the cards now as the numbers have improved somewhat. And then we have the ECB's announcement at 1:45 our time, followed by a press conference at 1:30. And again, unfortunately, like the MPC, we're unlikely to get any further policy changes. We had a big change last month by this forward guidance being introduced, so that's sort of given a bit more colour to them for the markets. I think we're going to have to wait until the following month or September before there's any further policy changes. And then really we run into ISM manufacturing in the States at 3 o'clock. Still very buoyant, 52.1, so there's quite a pickup there. There's something we'll all add to the QE tapering argument to be in September. And then finally, the big number on the month is non-farm payroll on Friday. We're expecting a number a little bit softer in line with ADP. So 195 was last month, was a lot better than expected, including the revisions. We're looking for 180 this month. And the employment rate just ticking down slightly from 7.6 to 7.5. And that's it for the week. So a lot going on, a lot of data all in 1 week. If you had to sort of score in terms of importance, these data releases, interest rate decisions from 3 central banks and the employment data from the US, probably 4 of the most important announcements one could have in 1 week. I know it's August, but we do have a lot of, the markets tend to have a few wobbles in August, partly because it's less liquid, or the markets are less liquid and are unable to perhaps cope with some shocks that have happened and tend to happen in August time. So worth sticking around for. Thanks for listening. We're back on Message again on Thursday at 8 o'clock. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.